Boom! What's up, Waves Capital? It's Royce Jacob. Welcome back to the channel. And in this video, we are going to be talking about how Jerome Powell, aka Santa Claus, just ignited a fire underneath the markets, which should hopefully keep this rally burning as we head into the new month of December, and maybe even keep things warm up until Christmas. And as you guys can see, we spiced up the set a little bit. We are getting festive. The holiday season is here, and I'm absolutely pumped that we are kicking it off with some green. So I'm just excited to talk to you guys about my thoughts around the current state of the markets, why I believe more upside is ahead, and a little bit about my December playbook when it comes to how I plan on trading the final month of 2022 heading into the new year of 2023. Okay, so over the course of this video, we will of course be briefly touching on the specific statements that Jerome Powell made that ignited so much optimism amongst investors. Again, the S&P 500 closing up over 3% today, the triple Qs or the NASDAQ 100 up 4.5%, and of course some of our favorite growth stocks just seeing a massive wave of green. Okay, and we will be discussing a few charts today, those three charts being the S&P 500, Bitcoin, and the Dixie. But at the very end of the video, as a little bonus, I want to give you guys my two favorite stocks going into the month of December. And as you guys know, my money is always where my mouth is. So, end of the video, I'll give you guys my two favorite plays for the new month. And as always, you guys, please let me know in the comments down below, what are your two favorite plays? If not two, just give me one stock down below, okay? Always curious to know what you guys are trading. So again, we will be taking a look at the Dixie, BTC, and the S&P 500. Just cover every pillar, every major pillar of the greater financial markets. We will be briefly discussing just some key points. This is all we're going to be reading here about why the markets were so excited about Fed Chair Jerome Powell's speech earlier today. And other than that, I do just want to read over a few points from my recent newsletters just to summarize my thoughts on the greater market environment, and again, talk to you guys about kind of my playbook heading into the month of December. Okay, so that's the breakdown of the video, you guys. We'll kick it off reading here. We'll then dive into the charts and really just once again reference the newsletter when I feel necessary. Okay, so before we get to reading, you guys, please give the video a like and subscribe to the channel if you're new around here and want to join Waves Capital. Closing out a great year, and closing out a pretty crazy year, a volatile year, a year full of learning, and hopefully more learning and more gains to come in 2023. I appreciate all you, and again, happy holidays to everyone. Pumped. Okay, so Fed Chair Powell says smaller interest rate hikes could start in December. Key points, again, this is all we'll read here. Fed Chair Jerome Powell, JP, confirmed Wednesday that smaller interest rate increases are likely ahead and could start in December. But he cautioned that monetary policy is likely to stay restrictive for some time until real signs of progress emerge on inflation. We will stay the course until the job is done, he said during a speech in Washington, D.C. at the Brookings Institution. Okay, so I listened to this entire thing live. I recommend you guys go watch kind of the VOD of it. But I think what was really, I'd love to see that. Love to see that breaking news. Stock futures tick higher. The end of this week is going to be sick, you guys. And if you guys are watching on a Thursday or Friday as we kick off the month of December, please let me know how the market's looking. How the market's looking in the future. But exciting times, you guys. Back to the point, I recommend all of you go and watch the VOD or I guess just the video, the recording of his, not only his speech, but the Q&A. And what was very interesting during this was that the markets rallied and the markets bounced during the speech itself, but the markets ripped during the Q&A because his tone was, he was a jolly guy today. He was like happy, he was smiling, they were cracking jokes. The moderator was really good, keeping things light. And I think that tone, really the tone the first time you've seen JP or Jerome or Santa Claus, I should say, smiling in quite a while is really what made investors confident in the markets. And again, you guys, the fact that the Fed will be stepping on the brakes at least a little bit when it comes to interest rate hikes, which is ultimately good for the markets. Okay, so speaking of kind of the rationale behind why stocks rallied following Jerome Powell's discussion. Okay, I could just kind of spit it off and ramble, but I figure it's better to just read over what I've already written. Okay, just my summarized thoughts. All right, so to do that, I'll start by reading this newsletter, and I actually want to reference yesterday's newsletter as well to talk about what's coming Thursday and Friday of this week as we kick off the month of December, because there are still some pretty significant things that are on the horizon that we all need to be paying attention to. But I will just say right now, I'm feeling pretty good about it. All right. So it's Wednesday at the time of recording. Hey, maybe Thursday, maybe Friday. It's the final day of November, and I'm jolly to say that Waves Cap is entering the crisp new month of December in the green, even as the greater markets see red. So again, you guys, this morning, many of our plays were actually in the green, but the S&P and Dow were in the red, and the Nasdaq was about flat up until this statement, which, as you guys can see here, really just popped the markets off. Okay, so tech stocks and growth sectors are currently outperforming legacy names, and again, you guys, I'd love to see the Nasdaq up, which is a very tech-weighted sector, while the S&P and Dow Jones are down, which is, of course, more legacy-weighted. This is a great sign that the markets are in a bottoming process, or really in a reversal off of the macro bottom, because tech stocks and growth sectors tend to front-run legacy names once things bottom out. So, of course, the Nasdaq and growth stocks, tech stocks, Apple, Amazon, Facebook, Meta, the FANGs, just everything else in the tech growth sectors has really seen a more significant correction than legacy plays. So when you start to see the dynamic of tech stocks and growth sectors overall starting to outperform those legacy names, that's typically a sign that the macro bottom is in, and the next leg of the bull market is upon us. I know a lot of people think 2023 has a recession in store. That's very possible, but you guys, it's also important to remember that the market and the economy are two completely different things. The market recovers well before the economy due to its efficiency at pricing in foreseeable headwinds. And I think that, I don't think we are revisiting the bottoms. I actually don't think the SPY, although we are testing some significant resistance right now, which we will, of course, be diving into, I do think that, I think the lows are in, honestly, you guys, and I do think that unless a black swan hits, I should say, or an unforeseeable, crazy macroeconomic geopolitical event happens, then I think the bottom's in, and I think the next leg up is here. So I trust this trend will, I trust this to be I trust this trend will persist, there we go, through December, and I'll continue to structure my portfolio upon this belief. I've been intentionally waiting for JP's speech to conclude prior to finalizing my thoughts on the and trades on the day, and now I have even more reason to feel jolly because we called the reaction correctly. And I do want to reference, again, this newsletter that was from the day prior, just to kind of let you guys know that I'm not pulling this one out of my ass, okay? We've been calling this for a while. Okay, the markets are ripping as he was standing upon that podium. And to simply reiterate my thesis on current and future Fed speak, which is what, and again, a lot of you guys who are part of the newsletter group, I've said this in videos many times as well, but a lot in the newsletter, this has been my thesis on any time one of the Fed one of the major players in the Federal Reserve speaks, JP, of course, being the head honcho. I think the surprise potential is to the downside. The surprise potential to the downside, is entirely priced in, and therefore any surprising language out of the Fed favors the upside. Okay, you guys, it's very unlikely because Jerome Powell and the Federal Reserve's tone over the past month or so has been so hawkish or so negative. It's very unlikely, especially again heading into the holiday season. There are mass layoffs occurring. Apple, Amazon, Facebook, so many companies, pretty much every day, a massive tech giant or large corporation is announcing a mass wave of layoffs. So this is what he likes to see. And unfortunately, I'll just read this right here because I said that bad news for the economy is unfortunately good news for the markets, because a poor labor market would let the Fed know that their efforts have been effective, therefore encourage them to step on the brakes with the rate hikes. Okay, so again, time will tell. Stand by my one last winter wave thesis. It looks like that winter wave is upon us, following Jerome Powell's statements. And you're the man, JP. That's why I'm excited to make the thumbnail right after I finish recording this. I'm definitely going to throw a Santa hat on that guy because he's delivering the goodies this year, okay? Or at least allowing us to get a little more presents under the tree, all right? So I do want to finish the rest of this and talk to you guys about my playbook and some of, or just generally what I'm thinking about the markets. But let's quickly go over a few things that are on the horizon. So again, Jerome Powell's speech, there are 3 things that investors were keeping in their scopes in the latter half of this week, in the final week of November. We just checked off Jerome Powell's speech. That went well. That's in the green. Tomorrow, Thursday, December 1st, we have a lot of consumer spending data that's being released. And then on Friday, the cherry on top is the November employment report or unemployment report, which is what everyone's really going to be looking at. But considering the Fed, considering Jerome Powell just delivered such optimism to investors, I think things are going to definitely be looking up. So as far as the macro is concerned, the week isn't over just yet. We just covered those, so I won't read over that. Thankfully, I believe these data reports will also favor the bulls. And I made this clear prior to Jerome Powell's speech, but I'm now even more confident in this opinion or belief. I trust we'll be riding into the weekend on a green wave, and I am pumped for the December swell and or rally, of course, that is mounting on the horizon. Now, let's dive into the December playbook, which I won't dive into again. I'll give you guys my favorite 2 plays after we take a look at the SPY, Bitcoin, and Dixie. But you guys, if you do want to know how I'm trading on a day-to-day basis, if you want to join Waves Capital for real, if you want to, and again, on days like today, on days like just as of late, I feel zero guilt in plugging my product because this is what I spend my life doing. This is my job, and I'm happy to share with you guys, and I'm happy that a lot of you guys ride with me, and a lot of you guys have stayed with me for so long. If you want to join Waves Capital, you guys, if you want to know how I personally trade my portfolio on a day-to-day basis, and you want to know what I'm buying, what I'm selling, why I'm buying it, why I'm selling it, which I explain in the newsletters, along with real-time price targets and, again, real-time macro analysis, what's going on in that day. That's going to be the first link in the description box down below. There, you'll find my complete portfolio and daily newsletter. Again, the thing I just clicked on. And, of course, you can choose from any of these pricing plans that suit you the best. $15 a month, $40 for every 3 months. It's the holidays. You can try it free for 7 days. And if you don't like it, you can just unsubscribe. It's all good. But I really do trust that you guys will be sticking around. I really do trust you guys will be sticking around. I don't know why I was so zoomed in like that. But I get you guys. I appreciate it if you join the Waves fam. And I trust you will not regret it. And welcome to the winning team in advance if you do. But as always, if not, no worries at all. I appreciate you watching this, and I do hope you gain value from this. Okay, so that's that, you guys. Again, I'll talk to you guys about a few small caps that I'm really excited about after we take a look at the SPY, BTC, and Dixie. But let's kick it off with the Dixie because, of course, the golden rule of macro is that Dixie rules all. The US dollar index, which is just the US dollar weighted against a basket of other fiat currencies, showing the strength of the dollar. The Dixie down, pretty much everything else up. Vice versa, Dixie up, everything else down. Right now, Dixie down. That's why everything else is green. And I think in the last video, Dixie was up, everything else red. This is, again, the ground rule, the golden rule of macro trading. Okay, so Dixie is, at this point, approaching the bottom end of the shorter term range following the massive sell-off at the beginning of November. But I do think that this is definitely a bull flag in the making. And I do think, similar to our two waves, our two-wave patterns to the upside, the same two-wave thesis, the same psychology is involved with the two-wave to the downside. And right now, the Dixie is not looking good. And I think another wave down is in order. And obviously, based upon what I just said, the golden rule of macro, that is good news for everything that trades against the dollar, which is pretty much everything. Okay, so that is the Dixie, you guys. Let's move on to Bitcoin, and then we'll close it out with the SPY. So BTC, real quick, is looking really good, and I'm really content with how Waves Capital, especially in the newsletter, has been trading this over the past couple of days. Okay, not just Bitcoin, but of course just growth stocks in general. But Bitcoin, we really nailed this one, so I feel good about that. Bitcoin in the short term did break above, in the shorter term, I guess, obviously, did break above short-term resistance, which is this red line right here. I set my target at $17,000, which, of course, came very, very fast following a break of that resistance, fortunately following Jerome Powell's speech. So from here, where do we go? That's the question, right? From here, what I'm seeing playing out is actually a pretty funky inverse head and shoulders pattern. We saw a small version of it over here, but I think we're seeing a larger scale version of that as portrayed, of course, by these arches that I have drawn right here. So shoulder, head, shoulder. This is This is the good. This is the bullish brother of the head and shoulders pattern, which resolves itself to the downside. But again, inverse, it's flipped on its head. I do think that this shoulder could take us to, of course, the base of the other shoulder, of the opposing shoulder. And in the case that this does resolve itself, as I expect it to, that would take us to about $20,700. Conservatively, I'll just say $20,500 is my target. And I do think we can see that by mid-December. Okay, so from here, that would translate to about a 20% move up. So, I mean, for Bitcoin, that is pretty damn awesome. Let's take a look at the SPY to close it out, you guys. The SPY today just tested a very significant line of resistance. If you go back to my Thanksgiving video and how I'm trading as we head into the month of December, I did call for a $407 S&P 500 on December 1st. We're a day early, but we're pretty damn close. And again, you guys, it's just crazy how sometimes the fundamentals in the macro that is beyond your control, or even beyond like expectation for the most part, can just lend itself to perfectly playing into your technical analysis. But it happens a lot, and that's kind of the beauty and the nature of the markets as you progress in the sport, and really gain that kind of sixth sense and instinct that comes with staring at charts every day and reading the market related news every day, right? So again, we did officially test macro resistance. The first touch point on this trend line dated all the way back to the SPY's all-time high in January of this year, going on a year ago now. So touch point here, whoops, sorry about that. Touch point here, very, very obvious line of resistance. And as of today, as of market close, because we are up a bit in after hours trading, the SPY is currently sitting above this line of resistance. Now, we're just barely there. I wouldn't call this a break yet. If we see green tomorrow, and if we close a green day tomorrow, that would solidify a breakout and a macro reversal to the upside, okay? A break of the long-term downtrend would signify a reversal to the upside, and really, in my mind, at least as far as the short term is concerned, really lock in the next wave up of the overall macro bull market. Okay, so short term, I do have a couple other price targets that I will be definitely keeping an eye on, and I will, for full transparency, I will be restructuring a lot of my call options positions, which I actually did today. Shout out to, again, members of the portfolio group who saw today's trade alert. Today was a great opportunity to restructure any call options that you might want to de-risk a bit. The strike price is a bit high for your risk tolerance if the expiration date is a bit too soon for your comfort, which was my case today, and which is why I was super stoked to restructure some positions. And although I remain bullish, de-risk those positions or options contracts a little bit. It was a great day to do that. But again, I do think, as you can see here, I do think a bit more short-term upside is ahead. I do think that heading into the middle of the month, we could see a $420 plus SPY. 421 would be my next target to retest this broken line of support as new resistance, which I think is very, very likely. In the case that we test this at the intersection of short-term resistance on the SPY's ascending channel, which is this orange line. So orange and red intersect. That would take us to a $421 S&P 500 or SPY ETF on December 12th. And hey, maybe we test it even sooner. I will let you guys know that once we test this previous line of support following a breakout, that is where I do think we'll see a short-term reversal, and that is where, once again, I will look to taking some profits and restructuring those calls. So once again, you guys, if you do want to join Waves Capital for real, if you want to follow me in what I believe will be earning significantly more profits to hopefully buy your family and loved ones even more gifts, again, that's the first link down below. And if you guys are part of Waves Cap, I would really appreciate it if you dropped a comment and gave your realistic thoughts on it. If they're bad, you can let people know they're bad as well. But please, if you guys are enjoying being a part of Waves Capital, if you're not, let people know in the comments down below. And again, I look forward to riding into the new year of 2023 with you guys on that green wave. So happy holidays, you guys. I'll catch you in the next one. Until then, always remember, take action, make waves. Peace, team.